If you've ever heard that your business needs at least 2 years in business before you can qualify for funding, then this video is going to save you months to potentially years off of that timeline. With 15 years of banking experience, I can tell you firsthand that the 2-year designation is grossly overstated. I've seen businesses that get approved on day 1, and I've seen businesses that get denied in year 5. In this video, I'm going to be clarifying what it really means to have the proper time in business. And I'm going to be breaking down what banks really care about in this video. For those of you who are new to the channel, I'm JP, 15 years in banking and financial services, particularly as a small business banker much of that time. My goal, I've been working with consumer and small business clients to the tunes of 7 figures to 8-figure book of business and helping you to navigate the landscape of banking and lending so you can drastically increase your approval odds. So in this video, I'm going to help you dispel one of the biggest misnomers that is stopping you from getting access to capital for your business. So the first thing we need to get through is, where did the 2-year rule even come from? Really quick, we need to get some backdrop on this, all right? So it comes from certain lending products. That's going to be a key factor in this video, okay? The 2-year rule is not a complete lie. It's just grossly overstated, okay? So why banks like 2 years? 2 years of tax returns, revenue trends, cash flow history, business survival statistics, and less uncertainty, all right? Here's where entrepreneurs get in trouble. They assume every lender and every product follows the same rules, and they don't. So it's very important to understand that, again, the 2-year rule is a thing, but it is very product particular, okay? So funding you can get before 2 years. This is where a lot of you probably came in the first place. All right, let's talk about it. We're going to break this down throughout the video. So don't get excited after this part and click out. So examples, immediately business credit cards, some startup financing, okay? Friends and family, supplier financing, microloans, and certain CDFIs. For those of you who are new or don't know what those are, community development financial institutions. We're going to cover them a lot on this channel. I, as a banker, get the privilege of working with these institutions firsthand, one-to-one, often with mutual clients. So I'm going to be covering that on this channel because they can be a great initial funding source. So at the 6-month mark, revenue financing becomes available to you. Working capital becomes available to you. Equipment financing, invoice financing, merchant cash advance, and some online lenders, fintechs and online lenders, okay, open up around the 6-month mark at some institutions and or fintech lenders. 12 months, now we're starting to hit a little bit of a sweet spot. Many bank products, business lines of credit, vehicle financing, large working capital loans, and more competitive rates start to kick in at this threshold. You've made that holy grail of a year plus. Now you've shown at least that level of stability, and you likely have at least that much in financials. It helps a lot. Where does the 2 years kick in? Let's not disregard or dismiss the 2-year threshold. Why? Because some of the most attractive financing offers with the best rates, terms, and highest approvals will come from this 2-year threshold. So as I told you earlier, don't get too excited and jump off of this video. SBA 7A. A is an apple for those of you who are new to it, all right? So SBA 7A. Large traditional bank loans open up. Commercial real estate opens up. Large unsecured facilities opens up. Longer repayment terms open up. And lower interest, or some of the lowest interest rates you're going to see on lending products, start to become available to you, all right? Some time in business matters, okay? But it's only one piece of the puzzle. So what are lenders really looking for? Like, regardless if you started yesterday or you've been in business for 5 to 10 years. So this is going to be described as a risk scorecard, if you will, all right? Personal credit, cash flow, revenue, time in business, industry, banking relationship, collateral, owner experience. That's a big one that people miss. Liquidity. Every lender weighs these differently. There's no universal formula, and that's why you need a banker and a capital strategist like myself and the content on this channel. You need professionals like myself who have got experience, that know what they're doing. I'm not trying to sell myself. I'm literally trying to guide you to understand this is a very, very, very diverse space to operate in. capital strategy, capital raising. And the metrics that you're going to be gauged by are diverse, and they're measured differently by lender, by product. It gets dense, all right? So, couple examples, real quick ones. Example one, business A is 8 months in with a 760 credit FICO score, 45,000 a month in revenue, excellent deposits, strong industry, and owner has experience and gets approved. Remember the 8-month timeline. Example two, this business is 4 years old, 610 credit, declining revenue, frequent overdrafts, tax issues, weak cash reserves, and gets denied. 8 months, 4 years. The 2-year mark is too blatantly overstated. It's not the whole story. All right. So which business was actually less risky? This one had nearly 3 times the history of business number one. But this is exactly how lenders are thinking. And this is why it's important not to get stuck on these single underwriting metrics or variables. So stop waiting. All right. One of the biggest mistakes is I'll wait until the 2-year-old mark before I apply. That's one of the biggest mistakes I see a ton of businesses make. Okay. And I mean that firsthand. Instead, what I recommend is build yourself into a stronger borrower ASAP from day one of formation. Improve your revenue, cash flow, credit, deposits, relationship, and financial statements. Get that all in order ASAP. If you're an existing business, get started now organizing these things now that you're aware of what you're being gauged by. It's not too late. You're still in business. You still need capital. You can get started today. So I like to break down wealth gap levers before we exit out of these videos, because one of these, you can see for my description, I am the wealth gap disruptor. That is the goal of my knowledge base. The strategies I put out in my content is to take the majority of us that have been either locked out of the system or suffering from the system or just unaware of how to function in the system economically, and bring you the data, information, and guidance that you need to make leaps and bounds in your lifetime with your finances and your financial goals. So many small business owners delay growth because they're being told they're not ready for funding. And if you haven't caught some of my earlier videos, I talked about going to the right institutions, finding the right products to apply for. You'll get this answer if you're not careful. But sometimes they're simply looking at the wrong lender or the wrong loan product, right? Financial literacy isn't just about saving money. It's about understanding where opportunities actually exist. This is pivotal, pivotal. So if this changed how you think about businesses getting funded, then I need you to subscribe. Like, comment, share, subscribe. And as a matter of fact, comment no patience down in the comment section, because we have no patience for misinformation stopping us from accessing capital. So drop no patience in the comment section down below. Every week, I'm going to be sharing these insights, usually up to 3 times a week or more. That's going to give you the advantage that you've been missing in your business to start effectively raising capital for your business. And we're going to get well beyond basic bank loans as we progress. But it is my job to make sure that you're getting the fundamentals in every video to build your foundation and your baseline, because some of you are prepared for bank level lending and you don't even realize it. So we just need to get you the right information, the right guidance to apply to your specific business situation. And as your capital strategist, from there, I can better ensure that you will access the capital that you need to stabilize and or grow. So comment no patience for this particular video in the description, in the comment section down below. I want you to get familiar with me. Welcome to the invitation. I want you to get more familiar with me in the description section and in the about section. This channel is actually named after an entire book that I wrote on these types of topics: accessing capital, leveraging the banking system, connecting credit and capital, and getting access to the financial and economic system in ways that have been locked out for most of us for the entire duration of our life and even generations back. So get in the description section, learn more about me, tap in with my book, and explore that, as well as the about section where you can learn more about me as an overall professional in the space. Other than that, again, like, comment, share, subscribe, support the channel so the channel can continue to reinvest and support you. Also, I want you to get in the description section and check out a couple of the tools that I have in that section as well. Other than that, I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.